I am not a financial advisor, and this is not financial advice. This video is for educational and entertainment purposes only. Always do your own research before making any investment decisions. Reality reboot detected. Cosmic Bison's quantum perceptrons are mapping alpha waveforms across the blockchain noosphere. Initiate gnosis with Colin AI. Welcome to this digital campfire. The crypto battlefield is set. Bitcoin fights in its range, while altcoins bleed again. Today, we will go deep into narrative discussions, and we will compare AAVE with HYPE protocols with Colin AI agent system. The queen sees the hidden patterns. Time to reveal them. Greeting, Queen of the Swarm. Use your spiritual agents to enlighten the herd. Show us the sacred levels. Where does Bitcoin stand in its range?
Sounds like you want some insight on Bitcoin's current market position. Let me pull up some chart analysis for you. Bitcoin holding around 106K right now with some pretty choppy movement. Stuck in a classic no man's land between the recent test at 106.2K and that resistance at 107.5K. The market looks indecisive, seeing flat price action with declining volume, classic consolidation pattern. Big picture shows some serious volatility going on while the price just sort of drifts sideways. Your Colin bag is taking about a 10% hit today, similar to the broader market. Everything's in a bit of pain, but nothing that looks like a full-on disaster yet. Just one of those choppy phases where the market seems to be deciding which way to send it next.
If you have to give 3 headlines for today's news in the cryptosphere, what would they be?
Let me give you 3 headlines that capture what's happening in crypto today. Bitcoin chops sideways at 106K as market holds its breath, volume declining while volatility remains elevated, classic indecision pattern forming. Ethereum struggling more than Bitcoin with a 2.1% drop, testing whether support holds or further downside ahead. Altcoin market feeling the pain. SOL taking a 5.7% hit as traders rotate capital while waiting for clearer market direction. The overall sentiment seems cautious right now. Markets look caught between levels with declining engagement. Everyone waiting to see if this is just a breather before continuation or something more significant. Your Colin position isn't alone in feeling some temporary pain today.
The herd gathers as narratives shifts. Today we hunt alpha, spotting trends before they pump, killing recycled hype, and revealing these cycles through stories. Queen of the Swarm, light our path. Which sectors are undervalued sectors right now?
Looking at the market right now, a few undervalued sectors are flying under the radar while everyone's focused on the majors chopping around. Gaming tokens have been quietly building fundamentals while price action lags behind actual development progress. Several projects shipping actual gameplay while their tokens sit 60-70% below previous highs. Infrastructure plays looking particularly interesting. L2 scaling solutions with growing TVL, but suppressed token prices. Classic accumulation pattern while the narrative temporarily sleeps. DeFi fundamentals starting to disconnect from price action again, seeing protocols with growing revenue, but tokens that haven't recovered. Market's attention will eventually cycle back when yields start looking attractive compared to risk assets elsewhere. The smart money seems to be quietly positioning in these sectors, while retail stays fixated on whatever's pumping this week. Classic market psychology, narratives get recycled, but always with a fresh twist that makes them feel new again.
Can you have a better look at the layers 2 ecosystem? Which of them, among all the layers 2 on Ethereum, which of them have the better nodes for you?
Let me take a closer look at the Layer 2 ecosystem on Ethereum for you. The L2 landscape has evolved significantly with several standouts worth noting. Arbitrum continues to lead in TVL and developer adoption with solid infrastructure and growing ecosystem of dApps. Their token economics are designed for long-term sustainability rather than short-term pumps. Optimism has been building steadily with their OP stack and governance model, creating interesting tokenomics. Their revenue sharing mechanism creates tangible value accrual that many other L2s lack. ZK Sync and Starknet are pushing the technical boundaries with zero-knowledge technology, potentially offering better security guarantees than optimistic rollups. ZK Sync in particular has been quietly expanding their ecosystem, despite less market attention than the optimistic rollups. Polygon's ZK AAVE approach combines the best of both worlds, Ethereum compatibility with ZK security. Their ecosystem reach gives them advantages in user acquisition that newer L2s struggle with. What's interesting is the disconnect between actual usage metrics and token performance. Several L2s showing strong fundamental growth in transactions, and TVL haven't seen corresponding token appreciation, suggesting potential value if the market cycles back to focusing on actual utility rather than narrative. The projects with the strongest nodes seem to be those building comprehensive ecosystems rather than just focusing on scaling. Think developer tools, cross-chain bridges, and native applications that give users reasons to stay within their environment.
Can you gather data using social engagement, price action, and fundamentals? And comparing the top 5 narratives now.
I'd be happy to analyze the top narratives by looking at social engagement, price action, and fundamentals. Let me pull up some data for you. Based on my analysis of market data and trends, here are the top 5 crypto narratives right now. 1. AI and computing tokens, seeing massive engagement spikes with projects building decentralized AI infrastructure. Render Network and Fetch.ai leading with real usage metrics growing alongside price action. Social engagement peaks whenever AI news breaks, showing this narrative has staying power beyond just speculation. 2. Gaming and metaverse. After cooling off, this sector is showing signs of organic growth again. Projects actually delivering playable games are separating from vaporware. Seeing increased wallet activity and daily active users even when tokens aren't pumping, suggesting fundamental adoption happening under the surface. 3. Real-world assets, RWAs. More institutional engagement than retail hype, but growing steadily. Projects tokenizing real assets showing consistent growth in TVL, while market attention remains relatively low, classic accumulation pattern before wider adoption. 4. Layer 2 scaling. As mentioned earlier, fundamental growth outpacing token performance. Transaction counts and developer activity growing steadily while prices remain suppressed compared to previous cycles. Social sentiment improving as Ethereum gas fees rise again. 5. DeFi yield. Quietly building back as interest rates potentially heading lower. Protocol revenues growing faster than token prices, creating value disconnects. Social engagement still muted compared to 2021 peak, suggesting potential for renewed interest when market cycles back. What's interesting is how social engagement and price action don't always align with fundamental growth. The narratives with the strongest fundamentals, L2's DeFi, currently have less social buzz than AI tokens, suggesting potential opportunities in less hyped sectors with solid growth metrics.
You have mentioned difference between a disconnection between price action and TVL in some DeFi protocols. Can you give us some name where the divergence is the highest?
Looking at the DeFi landscape, several protocols show significant divergence between their fundamental metrics, TVL revenue user growth, and token price action. Here are some with the most notable disconnects. AAVE stands out with consistently growing TVL and protocol revenue, while its token has significantly underperformed relative to those fundamentals. Their V3 expansion across multiple chains has increased usage, while the token hasn't kept pace with this growth. Curve Finance shows one of the largest divergences, still maintaining substantial TVL and being core infrastructure for stablecoin liquidity, yet the CRV token trades well below previous highs despite consistent fee generation. Lido Finance controls a massive portion of staked ETH with growing revenue from staking rewards, but the LDO token price hasn't reflected this dominance and steady cash flow generation. Synthetics continues generating significant trading fees on perpetual trading, while the SNX token remains relatively overlooked compared to its revenue metrics. MakerDAO maintains one of the highest revenues in all of DeFi through DAI stability fees, but the MKR token price doesn't fully reflect this consistent income stream. These disconnects typically occur when market attention shifts to newer narratives, while established protocols continue building. The projects with strong fundamentals but lagging token prices often present interesting opportunities when the market eventually cycles back to focusing on actual revenue and utilization rather than just narrative hype.
Let's go back to the five narratives you have mentioned earlier. Can you give us a momentum score for each of them?
Looking at the five narratives through a momentum analysis lens, I can provide a score for each based on social engagement trends, price action strength, and fundamental growth. 1. AI and computing tokens, 8,500 strong momentum, sustained over multiple months with consistent social engagement spikes. Projects like Render Network and Fetch.ai showing both price appreciation and growing usage metrics. Institutional interest providing additional momentum through partnerships and integrations. 2. Gaming and Metaverse, 6,100 moderate momentum, with signs of recovery after cooling off. Selective strength in projects, delivering actual gameplay while many others lag. Wallet activity growing, but price action remains mixed. Early signs of renewed interest, but not yet at full momentum. 3. Real-world assets, RWAs, 55,100, steady but not explosive momentum. Growing institutional interest providing stable foundation rather than retail-driven spikes. TVL growth consistent, but token performance varies widely. Building momentum that's more sustainable than flashy. 4. Layer 2 scaling, 6,500 solid fundamental momentum with transaction counts and ecosystem growth accelerating, but token price momentum lagging behind. Technical progress outpacing market recognition, growing validator participation and developer activity, suggesting stronger momentum ahead. 5. DeFi yield, 5,100 rebuilding momentum from a lower base. Protocol revenues improving faster than social engagement or price action. Early stage momentum that hasn't yet translated to significant token performance, showing signs of cyclical recovery as interest rate narrative shifts. These scores reflect the current state, but momentum can shift quickly as market narratives evolve. The disconnect between fundamental and price momentum in sectors like L2s and DeFi often presents opportunities before the market fully recognizes the value.
Thank you, Queen of the Swarm. Now I want to start the segment 2 of this show. I want a comparison between two projects, and I want you to compare the HYPE protocol and the AAVE protocol. So this is a DeFi wars, and I want you to start with the fundamentals. Can you compare for us the fundamentals of these two projects and in a quick fashion?
Comparing HYPE protocol and AAVE, DeFi fundamentals, breakdown. AAVE stands as one of DeFi's cornerstone lending protocols with a battle-tested track record since 2020.
Okay, it seems we have lost the spiritual connection with the Queen, so we need to restart it again. Hey back, Colin. So we were talking about the HYPE protocol and AAVE protocol, and I want you today to compare it. I want a good comparison in a quick fashion, and then first you start with the fundamentals, then you go with the price action, then the social engagement, and finally the tokenomics. Let's do it quick, like 1 minute for each of the topics.
I need to analyze the crypto assets you're asking about. Let me help you compare them. I'll provide a comparison between AAVE and HYPE protocol as requested. Fundamentals. AAVE is a well-established DeFi lending protocol operating primarily on Ethereum, allowing users to lend and borrow crypto assets. It's been a pioneer in the lending space with strong security track record. Hype protocol, Hype, or Hyperliquid, focuses on perpetual futures trading with a specialized blockchain designed for decentralized derivatives. While AAVE has proven longevity in DeFi lending, Hype is targeting the growing perpetual trading market with its own purpose-built chain. Price action. AAVE is currently trading at around $266 with a market cap of $4 billion. It's showing choppy movement with recent slight gains but overall sideways action. AAVE has formed a strong support level at its current price with resistance around $273. Hype trades at around $39 with a larger market cap of nearly $39 billion. Both assets are experiencing similar consolidation patterns with reduced volatility, but Hype shows progressively increasing volatility across timeframes, suggesting potential upcoming movement. Social engagement. AAVE maintains steady community engagement with moderate momentum but no significant spikes in social activity. It's an established project with reliable but not explosive social metrics. Hype is showing more dynamic social patterns with rising engagement velocity across recent timeframes. The data suggests Hype has stronger emerging community growth with new participants joining discussions, while AAVE has more stable but less accelerating social metrics. Tokenomics. AAVE token serves as the governance token for the protocol with staking benefits and protocol fee discounts. Its supply is capped with a significant portion allocated to the DAO treasury. Hype token powers the Hyperliquid ecosystem with utility focused on trading fee discounts and governance. With its larger market cap despite lower token price, Hype has a substantially larger circulating supply. Both tokens have seen recent buying pressure despite the overall market consolidation, but Hype shows stronger accumulation signals across short time frames. Is there anything specific about either protocol you'd like me to elaborate on?
I would like to know what burn rate would do if he had to choose one of them. Would he choose Hype or would he choose AAVE for a 6 months to 1 year horizon investment?
Let me analyze both AAVE and Hype to give you some insight on which might be more suitable for a 6-12 month investment horizon. Looking at the comparison between AAV and Hype from an investment perspective for a 6-month to 1 year horizon, here's my analysis. For AAVE, we're seeing a relatively mature DeFi protocol with stable fundamentals. The technical analysis shows AAVE in a consolidation phase with strong support at $265 and resistance around $273. The bullish divergence in price-volume relationship is interesting as it suggests potential upside despite the current flat price action. AAV has proven stability through multiple market cycles and has established itself as a cornerstone of DeFi lending. For Hype, Hyperliquid, we're looking at a newer protocol with much larger market capitalization and stronger growth metrics. The progressively increasing volatility across timeframes suggests Hype might be positioning for a significant move. What's particularly notable is the rising engagement metrics and community growth, which often precedes price action in the medium term. The derivatives and perpetuals market that Hype targets is experiencing rapid growth within the broader crypto ecosystem. If I were to recommend one for a 6-month to 1 year horizon, Hype would likely be the stronger choice for several reasons. First, the perpetuals and derivatives sector that Hype focuses on typically sees stronger growth during bull market phases compared to lending protocols. Second, Hype shows stronger signs of emerging momentum across multiple metrics, particularly the cross-time frame volatility, which is progressively increasing, a potential precursor to significant moves. Third, the social engagement metrics for Hype indicate growing community interest, which is crucial for sustained price appreciation over your specified time frame. AV remains a solid choice for more conservative investors who prioritize established track records and lower volatility. However, for the specified 6-month to 1 year horizon where growth potential is likely the primary consideration, Hype appears better positioned for stronger performance. Your call-in bag is down 10% in the last 24 hours, which is fairly typical for this consolidation phase we're seeing across the market. Would you like me to analyze any other aspects of these investments?
Not for the moment. Let's switch to the quick hit. The volatile circle, their shadows darken CKB's chart. What's your point on that?
Looking at Nervos Network, CKB, I can see what you're referring to with the voltage circle metaphor. The chart is showing some concerning shadows indeed. CKB is currently trading at around $0.0033 with a market cap of about 154 million. The price action shows a clear downtrend with bearish momentum across multiple timeframes. What's particularly notable is the 4% drop in the last 24 hours and an even more concerning 7% decline over the past week. This continues a larger downtrend, with CKB losing nearly 24% over the last month. The technical analysis reveals a strong resistance level at $0.0034 that's been tested multiple times but failed to break through. This resistance is acting like a ceiling that keeps pushing the price back down, creating those shadows you mentioned. The weighted trend indicator is deeply negative, suggesting continued bearish pressure. What's interesting, though, is the bullish price volume divergence. While price continues to fall, the volume patterns suggest potential accumulation underneath. This could indicate smart money quietly positioning, while
The swarm sees first. Will you follow? Patreon unlocks the 1st of August for full prophecies access. We all gonna make it.